John Freeman is joining us, research analyst at CFRA Research. We've also got Tom Whiten here with us in the studio to do some trading. John, let's talk Oracle. The big question, of course, is what do they say about China? What do they say about their enterprise businesses outside the U.S. around this scare?
Yeah, well, it looks like in terms of the results, there was not really any impact, which kind of makes sense. The quarter closed at the end of February, and if you remember, February 19th, the market was at an all-time high. So obviously, there wasn't a whole lot of built-in, influence from coronavirus yet, at least at the enterprise level. So I thought operationally, execution-wise, was pretty strong, and I have a sell rating on the stock. So, but I do think that they're going to be that they are going to be impacted over the next couple of quarters by the economic effect of the coronavirus. I think that's just inevitable. But I see these times of economic downturn as a catalyst for tech change to push, cloud computing, kind of over the edge toward all of more mission critical applications. I think that's what happened in 2008, 2009. And I think that's going to be a headwind for Oracle, at least for the next, this cloud transition is going to be a headwind for growth for them, at least for, until 2022, I think.
So it's nice to see this slower moving company compared to some of the other more nimble, smaller, newer peers in the space. Hit the estimate, right? I mean, John, Oracle's had some pretty rough reports in terms of expectations for growth and speed of growth. So the fact that in this market they're up 11%, doubling the bounce in stocks today and more, this is a pretty good day for Oracle, it seems like.
It is indeed. There's no doubt about it. So, I thought specifically, your growth was 2%, higher than expected by about 50 million. They beat consensus by about 50 million, not a huge beat, but in this market, probably, exactly what was sort of expected, or, obviously reflected in the stock. People want to kind of go flight to safety. And I thought that the operating margin expansion was about a 2% operating margin expansion. So it wasn't just that they were, that they eked out some growth. It was that they were able to, generate higher profitability. That was probably the part that impressed me the most. And obviously, in a situation, in an economic downturn, in terms of perception, that's where, I think a lot of investors are going to flock to. But I think maybe, it's probably a good, it might not be a bad idea to take a breather with Oracle if you've limited the damage, because I think that the real impact of tech change and the economic downturn as a catalyst for further tech change is on the come for the next over the next couple of quarters, I think.
So are you saying there's still more headwinds for Oracle's main business? How does the earnings change your view, John? Do you like the stock? Not like the stock?
Oh, I definitely don't like the stock, and I think that, but I'll certainly admit that they had a great quarter in terms of execution. But I think it's a head fake. I don't think it's a real safety stock.
I see.
I think it's a fake. So I think that in times like this, they're going to lose a lot more business because inertia goes away and enterprises have to make hard decisions, and they're going to want to cut costs. They're going to want to cut these. Maintenance contracts and support contracts that are very expensive, and I think that's going to be the primary headwind to growth before cloud is big enough, right, to take off. I mean, by my estimates, the cloud as a percentage of their business is still in the 20s. It's about 22, 23% of their revenue, because remember they mix their cloud segment with the maintenance segment to get that sort of what they call blend, that blended cloud and cloud subscription and license support segment, right, which is 71% of revenue.
All right, so they've still got some competitive headwinds. I can definitely see what you're saying here, John. Hey, John, can you stick with us? Because we're going to do an Oracle trade here, but I want to get your thought on some of the other big tech here amid what's happening in the market. Tom, given the kind of bearish take here from John with the bounce, if you want to use this as a selling opportunity, how do you do it if you want to use options and get some downside exposure?
Well, going into the option market, instead of selling the stock outright, a little bit more capital intensive on that note, but I looked at a simple option strategy that's inexpensive to get into. So the costs are low, even though volatility in the overall market's pretty high.
Okay.
What I looked at was a straight put butterfly. So the stock traded above $45 this morning. John's got a sell rating on this. So how do you take advantage of that at a low input cost, but staying risk defined on it? And I looked at a put butterfly here. Really simple, Oliver. I'm buying one of the 45 puts, which is currently just slightly in the money, selling 2 of the 40 puts, buying 1 of the 35 puts. It creates a downside put butterfly with the apex being at that short strike that you're selling 2 of. So if you can see right here, you're paying roughly about a 75-cent debit, maybe a little bit more, but each wing of this butterfly is $5 wide, minus what you paid for it, 75 cents. So you have the potential to make over $400 on each one of these put butterflies. But it's a real inexpensive directional type trade using the April series. So you got about a month in this trade. It's not going to really start to expand a lot, even if it's around 40, until that last week or two into expiration. But this is a way to take a directional bias on a trade with a low input cost.
Got it.
And you only needed to
You're selling
lower.
the 40 puts, but
Really,
you're still covered, so you're not getting slammed if this thing drops.
Nope. And look at that wide range you got, 35.75 to 44.25.
So the less it moves, the better,
Yeah.
but you've still got plenty of coverage here in range. All right, I like it. Tom, hang on with us too. John, when we look at the market overall, you covered a lot of big tech, John. This has been a market that has sold everything basically indiscriminately. Do you expect tech to be a leader in the bounce back, or has our regime changed because of this sell-off?
Oh, so I think to the point of I think your earlier guest, the market strategist at TD Ameritrade, it's subscription businesses that you want to look at, and so if you have an accelerated move to cloud computing because the large enterprise, the Fortune 500, the Global 2000, right? They're going to want to cut costs, and they're going to want to use go more asset light, more nimble. That plays to cloud strength, and then the other part of it is that the beneficiaries of that, of course, are not just the cloud computing businesses, but the fact that the cloud computing businesses have a subscription revenue stream, recurring revenue streams. That's, I think, going to be the best place to be. And it was, for example, in 2009, it's when Salesforce really started to penetrate the large enterprise during the last crisis. And I think during this one, assuming that we're going to have a pretty significant downturn, I guess, for a couple of quarters, then I think the guys like Salesforce.com, ServiceNow, New Relic, Adobe also. I think those are all great names to play in this kind of market.
All right, very bullish software note there. I like it. John Freeman, appreciate the insight. As always, Tom, I want to get your thought real quickly here as the market is struggling to hold on to that original 4.5 or original 6.5% bounce. What happens if we fade here? Do you get worried?
Yeah, I think you get worried. I think out of the last 2 months, we've only had one up Friday. And people get nervous over the weekend. News comes out. We could get some headline news out of the Fed today, like they did yesterday. So you have to keep that in context.
DC, right? We're waiting for DC. That's the big one.
Yeah, and I kind of reiterate what JJ said earlier in the segment, Oliver, is be cautious here because this is different than I just don't foresee a V-type recovery or V-type bounce in the markets. It's going to remain volatile, and maybe it gives you that opportunity to sell rallies and buy dips here as we're down in bear market territory. But you got to be cautious here today, especially going into Friday, going into that weekend. And Mnuchin had comments that were positive, but yeah.
All right, appreciate it. All right, Tom White, like it. Green, still not as much as we started with. John Freeman's research analyst at CFRA. Thanks for the thoughts on tech.